AI is hands down the hottest industry of this year, and what a week it has been. While Nvidia has captured most of the spotlight and appears to be heading for new all-time highs before earnings later this month, and then Nvidia smashing expectations in their earnings report this week, reaching a new all-time high and breaking above $50 for the first time, AI stocks are soaring right now. But there's another rapidly accelerating sector within the vast AI market that deserves attention, an industry that is only beginning to get some attention now, and that is AI robotics. So today we're looking at two exciting companies in the robotics world, Serve Robotics and Knightscope. Both are innovators, but when you look at the numbers and the potential, one of these companies is in a league of its own. Before we get into it, if you find any value in this video, can I ask you to smash the like button? It literally costs nothing, but it helps the channel out so much. I'm aiming to get 500 likes on this video. Help me achieve that goal. For anyone that's new, make sure to subscribe so you don't miss out on any new content like this. I'm not a financial advisor and this is not financial advice, so always do your own due diligence. Now let's get straight into it. Everybody is chasing the next big AI stocks, and in this video I want to spotlight two companies making waves in robotics, Serve Robotics and Knightscope. They're both pioneering AI robotic automation, but the real story here is how the market values them. If you are unaware of this company, Serve Robotics develops advanced AI-powered sidewalk delivery robots, but they recently hit the headlines after Nvidia disclosed a stake in the company. This has seen the stock skyrocket to a market cap of over $400 million. While Knightscope is an advanced security technology company that builds fully autonomous security robots that deter, detect, and report. Knightscope is an AI security robot pioneer with several models on the market being deployed at schools, casinos, hotels, hospitals, and other public venues across the US. So let's start with the numbers. Serve Robotics brought in $470,000 in revenue for Q2 2024, while Knightscope pulled in $3.2 million in the same quarter. Yet somehow Serve has a valuation of nearly $440 million compared to Knightscope's $56 million. That's a massive difference for companies in the same sector, especially when Knightscope is leading in actual revenue. Now, analysts have proven to be very bullish on this sector this year. Serve Robotics has a $16 price target, which gives upside of over 60% from the current price. But Knightscope has been given a massive price target of $200, which is nearly 1,000% upside from the current price. And in my opinion, it's easy to see the logic behind this. This is a company valued at only $55 million. But back in 2021, the security robots market hit $27 billion. Although the industry gathered some attention at the time, it has been largely under the radar. But with the emergence of AI over the past year, the security robots industry is expected to climb to over $116 billion in less than 6 years. And Knightscope is uniquely positioned to take advantage of this. Knightscope's unique value goes beyond just revenue. The robots are deployed across sectors, actively enhancing security in schools, hospitals, and corporate campuses, with AI-driven patrols and real-time data analytics. The K5 robot, for instance, autonomously patrols outside areas, detects anomalies, and provides instant security alerts. It's a real-world solution making a real-world impact on public safety. Knightscope's autonomous security robots, or ASRs, are already making a difference, reducing crime by up to 46% in areas where they're deployed. They've signed over 30 new contracts since April 2024, rapidly expanding their footprint across sectors I've already mentioned, such as schools, hospitals, and corporate campuses. And their machine-as-a-service model is unbeatable in terms of cost, providing 24/7 security for as low as 75 cents per hour compared to traditional security services that can cost up to $85 per hour. Now here's something that might really catch your attention. Knightscope stock is tightly held, with only 2.7 million shares in its float. That's an incredibly low float, which means demand can push the price up fast. We're already seeing that Knightscope stock's been trending heavily on social media platforms like X and StockTwits, where investor sentiment has been extremely bullish. So let's talk about the recent performance. Over the past month, Knightscope stock has only had 2 days in the red and even topped $20 very briefly. Each day there's been significant upward movement. with recent prices hitting over $18 this week. In fact, Knightscope stock is up over 200% this month alone. This kind of momentum isn't typical unless investors see strong potential. Now, if we compare industries, Serve Robotics focuses on delivery solutions, while Knightscope is targeting public safety, a market poised for long-term growth as organizations invest more in automated security. With growing awareness of the need for public safety, Knightscope's technology seems to be in exactly the right place. And we can see this need clearly with all the recent demand for Knightscope products. In the past few weeks alone, Knightscope reseller TSNL issues purchase orders for 37 emergency communication devices to be installed at a Georgia medical center, a Florida university, and to restock inventory. Then 3 universities have scaled up emergency communication contracts with Knightscope, and most recently, Knightscope's healthcare clients add service contracts for earphones. Now, from this, it's clear to see that there is strong demand for their products. And this article, published during the summer on Investors Place, ranks Knightscope as one of the 3 hypergrowth stocks poised for millionaire-making gains, citing the exciting business model supported by high contract conversion and renewal rates, and saying that Knightscope may help shift the security and protective services landscape. So again, I go back to value in the market. Does Serve Robotics justify a $400 million valuation? And if so, then why is Knightscope not valued on par with Serve Robotics or even higher? It's a question worth considering, especially given the revenue strength, unique stock structure, and demand-driven momentum. Knightscope might be an undervalued robotics stock that could surprise everyone. In short, Knightscope is gearing up for big things this year and you don't want to miss out. Let me know your thoughts on Knightscope in the comment section below. This is such an interesting company, and they certainly have a lot of major positives. But remember that I'm not a financial advisor, this is not financial advice, so I highly recommend you do your own due diligence on Knightscope. It's not one you want to miss out on. To learn more about this company, check out the link in the description below where you can look at the investor's presentation and other details about the company. Thanks for watching, and I'll catch you in the next one.